It's no secret we've got a massive, highly divisive presidential election coming up. You guys, it's never been such a divisive election that I've seen in my lifetime. I'm talking like Bloods versus Crips divisive, Yankees versus Red Sox, Cowboys and Indians types of war here we have going on. This is the main reason I don't talk politics with my friends because, again, it divides people so much. But looking at Greg and I's largest conviction for investing in the current and long term right now, which is gold, which presidential candidate is better for the future of gold than its price? As you likely know by now, precious metals have demonstrated a great deal of enthusiasm lately. From the end of November through this week, gold climbed nearly 15% to over $2,300 an ounce. And while silver has received less attention during gold's rise, it turns out that the white metal rose even more on a percentage basis over the same period. Yes, it rose 25% to a price per ounce of around $28.50. Now, just a couple weeks ago, both metals had reached even higher, with gold going over $2,400 an ounce. And for a time, silver was knocking on the door of $30. But again, it was when the precious metals decided that it was a time for a breather, and everything has to trace back a little bit, even stocks and crypto. And it retreated from those respective price points. Now, the catalyst of those pullbacks, said analysts, was twofold. Some profit taking cued largely by growing uncertainty over the likelihood of imminent metals' favorable interest rate cuts, as well as a diminishment in Middle East tensions that serve to lower the asset's geopolitical risk premium. Are we out of the woods yet? I don't know. You got to keep an eye on the news, I guess, for that. So after a period during which the asset behaved particularly inspired fashion, the question that invariably is asked is what's next? What's going on? What's going to happen with gold and silver? Now, in the case of gold, some experts are saying that the answer is that it'll regroup and resume its upward trajectory, which I do believe in that. I've told you all the time, I think it's going over 3,000. The fundamental reason that they're saying is that many of the drivers in which gold's recent performance has been attributed remain intact. And that's because those drivers are rooted in economic and geopolitical dynamics that are expected to remain relevant for the unforeseeable future. Now, I quote, historically, the kind of macroeconomics and geopolitical background that we're experiencing right now has always been favorable for gold. And this was a quote by George Milling Stanley, who is the chief gold strategist at State Street Global Advisors, who also added to say, it would not surprise me to see gold go on a good deal higher from where we are today, end quote. Now, when Milling Stanley speaks of the kind of macroeconomics and geopolitical background, what he's saying is in play right now. And he's referring to something that is totally replete with uncertainty. As it turns out, one specific potential driver of both macroeconomics and geopolitical uncertainty to which precious metals analysts are starting to turn their attention is the 2024 US presidential election. Yes, it is right around the corner, just months away. And this election, you guys, is seen as a possible source of actual gold favorable tension in both ways. One is the election itself, meaning that the period of the campaign and the actual voting event. A lot of uncertainty, people pull their money out of the market, they're terrified. Even a casual observer of the current US political climate and presidential election dynamics recognizes the potential for election season, including the election itself, to have tons and tons of tension. I'm talking tension you can cut with a knife. Some analysts suggest that if the election were to evolve in this way, it could constitute yet another concerning geopolitical event, one in the capacity to really strengthen the price of gold and create more demand. Now, observers are saying the other way the election is poised to possibly exert a positive impact on the price of gold is through the longer-term political implications that could manifest in the aftermath of the voting in itself. Bart Mellick, global head of commodity market strategy at TD Securities, weighed key policy outcomes expected to be realized following the election. And he actually went on to say that gold-positive conditions are likely to emerge regardless of who wins, whether it's Trump, Biden, or if someone takes over for Biden, which I talked about many videos ago, so please subscribe if you haven't already. Now, few would disagree that the uncertainty is among gold's most reliable drivers. People buy gold when they're in fear. And according to experts, healthy doses of uncertainty, all kinds of uncertainty, right, have been largely responsible for the resilience demonstrated recently by gold. That uncertainty is expected to persist going forward in a variety of forms, including economic, fiscal, and geopolitical. And it seems one possible driver of the US presidential election has the potential to actually capitalize on all three of those things that I just said. UBS went on record saying that gold is the best financial move to make now, ahead of market uncertainty with the election. Now, to me, that's the most powerful thing I took out of all my research today, because UBS makes money selling securities, not precious metals. Yeah, they can sell you an ETF. They're going to make a lot of money on that. Let that sink in for a second. To me, that's very uncharacteristic. And the view from them, from such a powerhouse, is something not to ignore. Now, you probably aren't surprised, but the US presidential election potentially can have an impact on gold, just as it can have on any other asset class out there. Yes, every asset class is going to be affected by this election. And after all, Elections have consequences, and these happen in the form of economic, fiscal, and geopolitical macro policies that exert great effects on financial markets, instruments, and investors overall. We'll talk more a bit about how the two possible outcomes of the presidential election could impact gold in specific. Now, perhaps what's really not clear to everybody out there is the election itself, meaning that the whole ritual, how is that going to impact gold? I mean, like, people are voting, they're going to the polls, they're putting in their ballots, and usually, yes, there's some apprehension and uncertainty when it goes into that, but there could be at least a little bit of time, as observers are quick to point out. It's no secret the election, including the associated campaign season, is very divisive. I talked about that right away in this video. It's supposed to be competitive. There's going to be fraud. You know it. Mark my word. Now, recent polls have Biden and Trump are in a pretty close race right now, depending on where you get your news from, and we get it from everywhere, but it's closer than you think. And according to Real Clear Politicking, a national survey right now, they have Trump ahead of Biden by about 1.5%. So it's still pretty close, even though he is winning. One recent poll by Morning Consult has the current president and the former president tied at 43%. So that's another view. Historically, a lot of presidential elections have been very, very close. There's not many landslides. But it's really difficult to think of another one that's been really contentious with all the disruption, the divisiveness, and it's pretty crazy when you really look at that. I mean, just look what happened last time. Trump wouldn't concede forever. I mean, he was saying that there were votes being stolen. I've got an opinion on that, but I'm not getting into politics again because it's divisive. Remember what I said really early in the video. I do not like to get into politics. Once in a while, I'll tell you who I vote for, but whatever. In a recent assessment of the election's potential to impact markets and the economy, the chief investment office at UBS recommended gold as a portfolio hedge in part because of, and I quote, uncertainties about U.S. elections this November. Again, that's powerful. That's why I repeated it. And they went on to say this, I quote, we anticipate a highly contentious campaign. Duh. With the two candidates espousing competing worldviews on issues ranging from taxation to industry regulation to foreign policy. And that's what UBS said. Now, I said duh because, I mean, you watched the last election. You saw what happened. These guys were like rock'em sock'em robots the whole time. Trump didn't concede. Biden might have stole the election. I don't know. It depends where you're at with that. It's just something we may never know, or we do know. I know I'm going to get comments, and please comment below. We love your comments. We love interacting with you guys. Anyways, this election has so many consequences. Like, again, it's Bloods, Crips, it's Cowboys, Indians, it's Yankees, Red Sox. Pick your favorite rivalry, the Red River rivalry, LSU, Florida, Georgia, Alabama. This is what's happening with this election. It's going to be wild, and that is why you need exposure to gold. But as I talked about earlier, the potential consequences for gold arising from the election are rooted in much more than this actual election itself. And I'm sorry to go on a tangent there. I just think this is going to be a crazy election. Indeed, the larger and more lasting potential implications for gold are more likely to stem from the policy consequences generated by the voting results. And from the vantage point of TD Securities' Bart Mellick, the outlook for gold appears favorable. It does not matter who wins, Biden, Trump, or anyone else. The bottom line is, protect yourself. Greg and I both protected our most important asset, our nest egg, our retirement, by adding gold to that part of our investments. You can do the same by using the link below. There's a quiz. You can take that. It'll match you up with a vendor we've already vetted and probably used, one of the two companies. If you want to make that move, it is seamless. Do it, don't do it, but say I told you so later on. As always, we've got your back. Stay tuned for more economic updates, and please subscribe if you haven't already. This election is going to be wild. We'll be covering the whole thing. Thanks for watching.